Hey, everybody, Kevin here with another episode of the Real Estate Without Renters podcast. Thank you so much for listening to the show. And if you do like the show, and I hope you do, please go ahead and give us a nice rating and subscribe. That does help us produce more and more of these for you, and it gets our name out there. So I do appreciate that as well. Hey, also, if you belong to any meetup groups or real estate investment clubs, anything like that, and you want to share it with that group, I would certainly appreciate that as well. And before we get started today, I also want to thank my one of my sponsors, which is Noteworthy USA. You can go to Noteworthy USA and subscribe to the newsletter. It's the best newsletter in the note business, and also has more and more about real estate in that newsletter as well. I've got a couple featured articles in that. I have a column in there every single month. I also have an Ask the Expert column in there, but this one I did a lengthier article. I think you'll all enjoy that. And if you'd like to also visit this podcast on the video portion, which is going to be on YouTube, I'll have a link on there that you can get a free newsletter for this month. So check that out, noteworthyusa.com. We also have a live event coming up in Orlando. You'll find that towards October. So check that out as well. And they'll have some early bird tickets for that. All right, let me get to our guests here for you today, and I've been doing business with Stephen and his business partner now. I'm thinking coming up possibly on 2 years, and I got to tell you, they really have a great training. Everybody that I now train in the note space that came from their organizations has been really eager to learn, understands in investments, and couldn't be happier. So they are doing something right over there. It probably comes from people's backgrounds such as Stephen. So everybody, please welcome Stephen Nagy. Stephen, how are you?
Hey, Kevin, I'm doing well. Thanks. How are you?
I'm doing just great. It's good to see you. It's been a while. We'll be getting together here coming up in 17 days.
That's
up in New York for
we were talking about booking flights right before we went live, and you're like,
yeah. So yeah, hopefully I'll be seeing you sooner. I gotta book my flight to get up there, and that's just on me. But hey, it's great to have you, and you guys, like I said, you guys do a great job with the people that you work with, and I couldn't be more impressed. And you put on really good events online, and getting to be out in person, I think, is going to be a great thing. But tell us where you are and what you do. It's called the Money School, but a little more detail on what that is, what you guys teach, and how that relates. And then we'll start to get into possibly how that relates even more so to the current economy and what might happen in the future.
Yeah, absolutely. I mean, the Money School, our whole entire thing is helping you solve your money problem and take back control of your money. So anything dealing with controlling money, alternative investments, which we'll get into. You see on my hat here, if you're listening, it's called BYOB. Not bring your own beer, like I know, Kevin, you want with that Irish hat you got on there, but become your own banker, become the bank. So we teach different strategies on how to control your money and solve your money problem. Because, Kevin, let's face it, whether you are brand new in life, or you're starting over, or you're $1 million in debt, or you're racked up to your eyeballs in debt and living paycheck to paycheck, or if you're very successful and you're making great money and you're focused on what you do, we all have a money problem. Now, that money problem might be a little bit different. So your strategies and what you're doing to solve that money problem might be a little bit different, but everybody's got a different money problem. So that's what I like to kind of open up with a little bit is, what is your money problem, and what does that look like? And that's definitely what we can talk about.
So you're really more of a money mentor. And with that, what qualifies you to be there? How did you get into that position where you can really help people financially for that? What's the background?
Yeah, I mean, it's a great question. I've always loved money, I guess, so to say, right? But let me take a step back and explain that a little bit more, because who doesn't love money, right? But no, I mean, out of college, I didn't exactly know what I wanted to do in life. I was actually selling cars. I moved to Florida I grew up in a little small town in Southwest Virginia in the country, and went to a little small college up there, and decided just to get out, right, and leave. And I still have friends up there that have lived there their whole lives and it's great life. But I left. So I moved to Florida. I moved in with some family and bought a house with my cousin at the time, but didn't really know what I wanted to do. And this was right before '08. This was like in 2005, 2006. And so I went to work for a car dealership, and a guy there was like, "What are you going to do with your life?" I'm like, "I don't know." He's like, he had just retired from American Express Financial Advisors. So we started talking a little bit about investing and money. And at the time, Kevin, I didn't know the difference in a stock or a bond.
Right.
He's like, "Listen, let me get you an interview." And this was with American Express Financial Advisors, right as they transitioned. Now they're called Ameriprise Financial, which I was with them in the transition. But yeah, so he's like, "Why don't you go check it out?" So I didn't know the difference in a stock and a bond. I'm like, "All right, well, let me go learn." So I started studying and learning, and I liked it. I liked the idea of being able to help other people. I came from really crazy childhood, broken family. My mom was raised my brother and sister by herself on, and all that, but I'm not going to get into that. But so money was always one of those things where I didn't really understand. I didn't know that. It's one of those things where in a small town, you don't really talk about it. It's like, the mysteries around money. You don't ask people how much they make and stuff like that. But nonetheless, I was like, well, this is interesting stuff. So I studied, got my Series 7, Series 66, Florida 215 variable annuity and all that. So I go out, I'm like, I'm a financial advisor, start meeting with clients. And I'm like, I think to myself, like, what the hell am I doing right now? Like I'm literally advising people on how to plan their financial futures and their retirements, but I was a broke kid, barely out of college. I was just getting by. Right. So I was like, this doesn't really make too much sense, but it was a great experience because Kevin, what happened is I really learned that the traditional ways of investing and the way we look at retirement and how to get there, things like invest in a 401k and rely on a pension or Social Security, that stuff just doesn't work this day and age. I mean, the Social Security Administration came out a few years ago and they said, if you take 100 Americans right now at retirement age, only less than 5% of those people are going to be able to retire and live the lifestyle that they want in retirement. And I found that firsthand as a financial advisor. I would meet with people and it was always the same story. They're either not saving enough now, so they have to drastically change what they're doing now so they can put more away for later, or they need to take on more risk, right? Or they need to push back their retirement age to give them more time to get to where they want to be. So it's always that same discussion. I'm always like, well, I don't feel like I'm really helping people because I'm like giving them kind of an ultimatum, like do this or do that, or you're never going to be able to retire or this or that. You know what I mean? Yeah. So one day, long story short, one day I was invited to a real estate investment seminar. And I, one of those things where they like come get a free book or something for attending. And I sat there and I listened to a speaker at the front of the room talk about real estate investing and going out there and flipping houses and buying rentals. And I was like, man, this kind of makes a lot of sense to me. Because with the stock market, the other thing I never liked about stocks, who controls that company? Right. You have the CEO. What if that CEO is crooked? Like, how much you're investing in this stuff, but how much do you really know about Apple or Kessler or some of these big companies, right? And then you see things like Enron happen, and you find, so it's like, where is that with a house? I was sitting there, I'm like, I can see it, I can touch it, I can manipulate it. I know exactly what I would need to do. So real estate immediately resonated with me. So I was like, all right. So with my cousin, we just started a company. We went out there, we started doing real estate. So we started with some wholesale deals, got into some flips, started acquiring some rentals, and did that path. And then from doing that, I really loved it. And then I had an opportunity, and this was when Robert Kiyosaki, did you ever read his books, Kevin? Rich Dad? I did.
Yeah, I read one of them. Yeah, the first one.
So for me, that was like one of my mentors when I was just getting into the business. And at that time, he was kind of getting into the whole seminar business of education and going out there and teach. So they were like, hey, Stephen, like, how would you like to go travel the country and teach other people what you've been doing for the last year? And I'm like, well, that sounds cool. I was in my mid-20s, single. Let's go from a small little town in Virginia. Let's go travel the country and make decent money and have a good time. So I went partying for a couple of years and traveled all around. But what I learned from that experience was and you hear this all the time from people, but your net worth equals your network, or your network equals your net worth, right? Mm-hmm. So starting from, this was 12, 14 years ago, I started building my network. And these relationships that I formed 12, 14 years ago are relationships that still to this day, I can call them if I need something, even though I haven't talked to them in years, or if an opportunity arises. So started building this network and these relationships and these different business opportunities all across the country with different people. And I just kind of snowballed it over the years. Now, I've ran into some hard times when '08 happened. I was affected by that, lost houses myself, almost had to start over. There's been twice when I had to go back and get technically a real job because I had to get by. I had to take care of responsibilities, but I never lost focus on my dreams, which were to control my life. right, on my terms, and go out there and do things like real estate investors and acquire more properties and continue to build and grow no matter what. So I know that was a whole lot right there, Kevin. I kind of get started rolling with this stuff. And so we can kind of go from there, but it's just been a long journey. But it's allowed me over the years to kind of pick up on new things and meet new people and learn new strategies. So what we do today is kind of take a culmination of that last 12 to 14 years of not only education, but also the learning experiences, which are the times that I failed, right? I always look at those as learning experiences. So take the network, take the strategies that I've implemented and learned from, and just continue to grow on it to where today with my business partners, with Chris Naugle and Brent Kessler and people like you, Kevin, where we can go out there and really share this word in a way that our messaging, I feel like anybody can relate to, because we've been through it. We're nobody special by any means. I'm not a rocket scientist. I'm no Elon Musk, but I can learn from somebody else like Robert Kiyosaki, like Tony Robbins, like some of these other guys, and I can implement that. And that's what I like to do. And I love to help people. So it's a great fit for me being able to educate and train, which I love to do, and also work with people to truly impact their lives in the future.
Yeah, and I'm glad you shared that, because I didn't know the early history of you until you were just explaining it. So I'm hearing it for the first time, as my listeners are. And although I'm older than you, we have a lot of interesting parallels, because when I graduated college, I wanted to get into real estate, and I was really excited about getting into investments. And I got into the more traditional sides of that, the appraising, and then tried real estate sales and those sorts of things. And I wasn't a real estate investor yet, but I saw the potential for that. But I started I went to some seminars and such too. And I started working with a company that did some financial planning and teaching people, investing in mutual funds and getting the proper insurance and that sort of thing. And I wanted to become a speaker. And they said, well, you have to have your real estate license. I'm like, well, I got that. All right. You have to have your insurance license. All right, I'll go get it. Got my insurance license. Well, you have to get a securities license. And I knew the other speakers. I knew they didn't have any of this. What I was lacking was experience, and I'm like, well, how do I get experience if guys don't let me get up on stage, And so I got my Series 7 and 63 and all that sort of stuff. Now I'm like, got them all, now what? So anyway, I finally got broke into the speaking side, but real estate was for me too. That was the bigger magnet. And I did quite a bit in real estate, but I still look at, real estate as the financial side too. And that's really what I'm more specialized, of course, in for the last 20 some odd years, is that side of that. So be your own bank is really, we become the bank when we buy these notes. I mean, that's essentially who we are. We don't own the property. That's just collateral for it. We don't get phone calls in the middle of the night to fix up the property. We don't own it. We are acting as the bank. So it's a very interesting parallel there. And you're completely right about the networking and the database. And that was a lesson I did not learn early on. And I wish I had, but certainly networking. And I think that's why getting back together, and what I mean, everybody, is coming out of this COVID where everybody's doing things by Zoom. And look, I'm on Zoom every single day, working with my clients and doing these podcasts and all that. And it's a great forum. There's no problem with it, but there's something different about making that more human connection in person and building those relationships, because you never know where those things are going to take you.
No, absolutely. I mean, through the training and education side of things, I did get into some of the speaking as well. I mean, I had it at one time, it was well over 1,000 different stages in like 47 different states around the country. And, did that for several years. And now over the last 2 years, have done several hundred of these Zooms, I'm sure. And,
right.
And it's not comparable. I mean, thank God we've been able to have the technology and the ability to still be able to meet with people via Zoom, especially during the height of COVID and everything. And, and it didn't just shut us down completely. And we've actually been able to go out and reach a lot of people that otherwise we probably wouldn't have been able to reach before, via this means. But there is nothing like a live event. There's nothing like being in person with somebody or being in a room with a group of, like-minded individuals, because the chat is fine. Or even if you put all of our pictures all over the Zoom screen like they do, there's nothing like being in a room together. So I'm super excited. I mean, we did an event in Daytona Beach a couple months ago with the Money Multiplier, which is, the Become Your Own Banker with the specially designed policies. And We had about 150 people in the room, and it was just unbelievable. So we're like, let's do another event. And so you're coming to that one, the one in New York we were talking about in Buffalo, New York. So that's where my business partner, Chris Naugle, lives. It's where he's from, where our headquarters is there. So we actually rented out like a whole new studio, and we're doing it. It's a hybrid event. So we're going to have live and in person, but we're also going to have a virtual option. So it'll be the first hybrid event. But I've been telling people like the virtual is fine. Like if there's just no way you can make it to Buffalo, that's cool. Like do the virtual, because the education that you're going to provide, Kevin, and the other dozen speakers that we're going to have there is stuff that is literally life changing. And we should talk a little about the market and the economy in a second, because there's so much going on right now. But with what's happening right now, there can never be a more important time to understand money, but not just money, your money. And take back control of your money and get it ready. Because if it's in a 401k, it's going to continue to lose. I think it's already down something like the markets are down like 39% this year. It's just going to keep getting worse and worse. And we're going to have a long recovery. So why lose that money? And so there's ways you can move money. There's different things you can do where the money goes first, where we can not worry about inflation, not worry about the volatility, not worry about this increase in taxes we're going to see to pay for all this spending and everything that we're doing right now. So there's ways to avoid that stuff. And it just starts with that education. So this training we're doing in Buffalo at the end of July here, it could not come at a better time.
I agree. So let me get your thoughts on that and on the economy. And by the way, for those listening, again, if you pop over to YouTube, I'll have the links and more information about that event should you want to attend, because I think it's going to be a really good one, because it does address this. And I was glad that this timing came in. And of course, I've seen the list of other speakers that you have on there, and it's really a good mix of alternative investments. And I think that's important for people to see today, because you're right. So many people in the stocks and bonds, and I say this in my courses all the time, when somebody buys a stock, have they researched it? Do they really know what's going on? Have they looked into it? Like when we look at a note, we know about that note. We know about the collateral, and it's a much safer, better, higher yielding investment, where some people just buy a stock because they overheard it, and so I think understanding some of these alternatives enables people to expand that. And I'm not saying you can't make money in stocks and bonds and everything else. I'm not saying that at all. I'm just saying you should look at portfolio. You mentioned Kiyosaki. He talks about that. He goes, look at other things in a portfolio, because, we got inflation. We are probably already in a recession, and you do have to make some adjustments on that. So where do you think we are in the economy right now? Obviously prices are up and such, but what's your read on this? Is it going to get worse? Is it going to turn around? What opportunities do you see coming out of it?
Yeah, I mean, it's definitely unprecedented, right? I think we've printed something like 70 or 80% of the total money supply ever in the last 2 years. I think the estimates are around $7 to $8 trillion. We just continue to have different policies of spending and printing and spending and printing. Obviously, that's caused inflation to run wild. So we're at right around 8.5% inflation right now. If we look at real inflation, or use the way we used to measure inflation, it's up over 20%. So it's running wild right now. And inflation, if you don't fully understand inflation, it just simply means that what your dollar buys you today, it's going to buy you less of that same thing next year and the following year, et cetera. So you lose the purchasing power of the dollar. And so when we look at what our money's worth, if we look at, let's just use 8.5% inflation as an example. Well, if I have my money in a savings account at the bank, what is that savings account right now paying? 0.1%, if any. Anything. So let's just say zero, right? So money sitting in a savings account is losing 8.5% a year right now. So how is that saving if we're losing a significant amount of our savings every year? Mm-hmm. So it's not, right? So we have to look at alternatives to how we can save, where we can warehouse our wealth. And one of the things that we really are big on, and all the different strategies we teach surround this, but it's keeping money moving, because money sitting still is not doing anything for you. Money in motion is making more money. So we always want to keep that money moving for us at all times. And so then the question becomes, well, how do we keep that money moving safely without taking on a lot more risk and potentially losing it all, right? So that's where, when we look at things like the stock market, so that's like traditionally speaking, put it in a 401k or, an IRA where you get the tax advantages. Sure. right? But how much do you really know about a 401k? So first off, what are we doing with a 401k? We're putting money into something tax deferred. So it's before taxes go in. Now we're not going to, and then the money's going to sit in there and grow tax deferred. And then we pull it out at retirement age after 59 and a half. Then we're going to pay taxes on it at that point. If we pull it out before 59 and a half, we're going to pay taxes plus a 10% penalty for using our own money. So we're giving up control of our money till at least 59 and a half years old. Then the tax portion of it, what are taxes doing? I mean, like I just said, we just spent $7-8 trillion. The national debt's over $30 trillion with no end in sight right now. The national debt, go to that national debt clock.org or whatever it is and watch that thing. It just constantly climbs every single day. So we're going to have to pay for that one way or another, whether it's through higher inflation that deflates the dollar, that allows them to pay it off that way, whether it's raising taxes, which I think is definitely going to happen. They're going to have to raise taxes to be able to pay for this at one point. So taxes are continuing to go up. So we're putting off giving up control of our money to pay taxes on something to later when we're going to pay a higher amount anyways. So it's like, and then in a 401k, you don't have a whole lot of options. Like they let you invest in different funds or lifestyle funds or conservative or aggressive, but it's still a pool of funds. So at the end of the day, like you said, Kevin, like, what do you really know about these companies that are in there? You know, you can't go buy notes and things with the 401k. They'll let you buy like a real estate event, like a REIT, right? Like a real estate investment trust, but you can't go buy rentals and stuff like that. So it's just the traditional way of investing. It's just, and what they've told us just doesn't seem to work. So why do we do that? How much do we really know? So here's an alternative. Right. So instead of putting 15% in a 401k, maybe they give you a 6% match. Fine, take the match. It's free money. Put the 6% in. But let's take that extra amount that you're putting in and let's put it into a different vehicle, something like a specially designed policy that we do with the money multiplier. Because what that's going to do is that's going to give you guaranteed uninterrupted compounding growth of your money while you simultaneously can use that money to keep that money moving to do things like buy notes with Kevin to grow that money even more. So now we have growth going in two places within the policy is tax-free growth, tax-free, not tax deferred, while we simultaneously use the money to make more money to eliminate things like volatility because we're not in the market anymore. We're investing in something that Kevin teaches us to do, like a note. Like he said, I can see that house. I know exactly what it's worth. I know exactly how much money's coming in each month from that thing. It creates passive income. It's not creating a gamble that we're hoping that company's going to go up in value in the future. And we're hoping one day they're going to pay us a dividend or something, right? So we have complete control of it the entire time while we're going that way. So there's a lot of alternatives, or maybe it's an old 401k. You don't work there anymore. You know, it's just sitting there. You rolled into an IRA at Fidelity or something like that. Well, let's move it into a self-directed IRA. No penalties, no taxes occurred, nothing. You just move it from Fidelity to a self-directed custodian. From there, now you have control of the money. So now I can invest with Kevin, tax deferred or tax-free if it's a Roth account. And now I know exactly what that looks like for my retirement. So in retirement, would you rather hope, let's say you have retirement coming up in the next 2, 3, 4, 5 years. Would you rather hope and pray that your retirement account is going to continue to go up or at least maintain, and that the Dow Jones and the S&P and all that's going to hang in there? Or would you rather be able to get it out of all that bullshit and get it out of stuff like that and stick it into, something where we can create predictable, consistent income for the rest of your life? Things like notes, private money lending, real estate does for us. So to me, that just makes a lot more sense. It's just not taught traditionally, right? It's not taught in college. It's not taught, this isn't what, you've been taught your whole life, but also that's why 95% of people will never be able to do what they want.
Yeah. So part one, going back to what you were saying, there is a little bit of a recap. Part one is sitting on the sidelines in a cash position, which there's a tendency for people to do when this happens. They'll take their money out. They're scared now to invest in anything because all they see is bad news in the markets and everything else. And they sit on cash, and that's a mistake. And I like what you said there about, you got to keep the money moving, got to keep it in play and always advancing on there. And the more you have control on that, the more you're exposed to other things, such as you mentioned, real estate and real estate notes and things that have a tendency not to be as nearly as volatile. And you just have a better control over it. It makes complete sense to do that, because right now a lot of people are going to be in wealth preservation mode versus wealth growth. And I think the mentality, and you tell me if you disagree, but I think the mentality has to be a little bit of both. where can we make at least a return to offset that? I mean, inflation is going to affect everybody. We can't do anything about that. So the interest that we're used to making now is, even though it might be the same, if we're used to making 10% interest, but now we've got inflation, that's encroaching well upon that. Well, that's affecting everybody. If you're making 2% of your money, inflation's past you, now you're losing. So we still have to make better than, I would say, average returns. And I think the only place you can do that right now is alternative investments, right? I mean, and I don't even know why they're called alternative. I mean, certainly real estate shouldn't be considered an alternative investment. I don't think notes should either at this point, but you know what I mean? It's the getting out of the regular markets.
Yeah. I mean, well, so the stock market, right? It's going to go up and down. The volatility of it over time, it's always going to go up and down. Mm-hmm. Now, right now, with everything the Fed's done with the manipulation, the printing of the money and pumping it in and buying all the treasuries, I mean, it's created a little bit of a bubble, right? I mean, a very large bubble, some would say, and we'll see what happens with that. I mean, you asked me before what I see happening. I do believe we're going to continue to see hard downturns in the markets, and I think. Mm-hmm. I could see the Dow, and again, this is not financial advice. Like this is just my imagine or my opinion, but I mean, I could see it getting down 16,000 even, I mean, to the 20,000 range, the Dow. I mean, so we'll see. I mean, I think we're at like 31 today. I see a lot of room to continue to go down, but
there doesn't seem to be a concrete plan, out there of how to combat this, when you don't have any kind of, indicators from our leaders,
Kevin, unless you want to get in,
what are we doing? What's the plan?
That's the thing. What do you do?
You got to have your own plan.
Unless you want to get into like real advanced day trading of options and all that, which I'm not going to get into today, which we do teach, but that's not for me. Like I'm not a stock market, but so there's a way to make money in a downturn on a market. Short selling and things are so risky. You can lose so much money. So unless you're like day trading on top of it every day, stay away. But that's what I love about real estate, Kevin, is up market, down market side. There's different strategies. So to me right now, what I'm lending my money on, so we've sold off some rentals. We're taking that cash. We're doing it in short-term stuff. So I'm not actively doing any flips. I haven't for several years. Right. I'm lending on deals.
Okay? Oh, good. I was just going to ask you about the lending. So tell us about, that's another part of the note business, by the way, everybody, but it's lending out money, doing originations, and you're doing short term. So that means you're lending predominantly to investors to acquire property or rehab properties, right?
Yeah. So I'm watching the real estate markets because I know that it's going to take time when the real estate market turns, and it will. We'll see a pullback. We'll see some things come down, especially I think it'll be more regional. I think Florida.
Yeah, we're starting to see some of that already in the national numbers.
Oh, absolutely. Yeah, definitely. I mean, it's already happening, but places like Central Florida, other places, those are areas that we know are going to be strong for at least the next year, let's say, right? Mm-hmm. So any kind of deal I can get into in this area where I can lend my money, whether it's a new construction, whether it's a flip, short-term flip, anything 3 to 6 months, maybe up to a year, I'm comfortable doing because I know I'm going to be able to get in, get my money back. The deal's going to happen, close out before things really change hard, right? So stuff like that. I also know that when things do change, if we do see an influx of a lot of foreclosures or people start to lose their homes, they still have to live somewhere. We can model 08. Well, if we look at 08, things like multifamily, so condo or apartment complexes, affordable housing, mobile home parks. These were great areas to be in then when we saw all those foreclosures in single family homes. So I'm still watching and lending on some deals that are larger deals. If they're there, they become harder because hedge funds have really stepped in and start buying them, but there's still money to be made there. And I feel like that's a safe place for longer term. So anything 3 to 5 years, I'm staying in that either commercial or apartment complex type space. For that kind of thing. I think that can be a smart play for what we're in right now. What I'm staying away from right now was stuff I was doing 2 years ago, which were like larger flips, like $1 million flips, longer term flips, big developments and things like that. Now I am doing some stuff with some developers on single family homes, but these are rental communities that are pre-sold already to hedge funds. So they just about 8 months, boom, they're done. They're already sold. The escrow money's there and everything. So those are essentially done deals. So when we understand real estate in the markets, we can start putting our money into areas with less risk for what the market's doing, but keep that money moving and outpacing the things like inflation, like you were saying.
Yeah. I when I talk about this side of the business, I used to do lending money before I got into buying money, basically on these loans. I still deal with, the people creating loans all the time. We're buying some right now that actually the notes have been created, and the people who originate them, they want to season them a few months, and we're going to buy them right after they season them a few months. I mean, so there's a direct parallel with this, but always getting the question, and I'm sure you get this the same thing, which is, well, don't you need a license for that? Right. And it's like, no, you don't need a license. You need the know-how. You need the know-how, you need the contacts, as you were saying, and you need the legal agreements, really. That's all you need on those things. And then the opportunities are out there through your network. Like you guys have built your own big network through the Private Money Club.
Right. Yeah. I mean, at the end of the day, there's, no license. I mean, there's definitely do's and don'ts, right? I mean, so like you said, the education, just the know-how, but there's about 5 different rules you can follow for private money lending, very similar to purchasing notes, buying and selling notes. Same guidelines. I mean, you're going to underwrite the person, underwrite the deal. You always lend, little things like always lend only to like companies, never lend to an individual because of different Dodd-Frank laws and whatnot. I mean, having the contract or otherwise known as a mortgage or promissory note in place to cover you in case, what happens if something goes wrong, the terms that are in there, how much are you lending, what's the repayment look like, all that stuff. And so at the end of the day, there's maybe like 5 rules you need to follow for this. But once you understand that, it's very easy. We provide all that education right in Private Money Club. It's easy to do. And it really becomes a powerful way to not only get your money making more money, but if you're looking at retirement, creating that consistent, predictable income, because you buy a note, you know exactly how much that note's going to pay you every month for the next 10, 20, up to 30 years on a note, right? So you'll know exactly what that looks like coming in. So if you know you need $5,000 a year to live on, let's just use a random number, right? And you know that each note you buy is going to give you $500 in income. Well, I know that I need how many notes? 10 notes to be able to live that lifestyle. And if I want to up it, I just need to buy more notes or whatever I need. So you can really predict and create the lifestyle that you want. And that's the other thing, in real estate too, if it comes to rentals, it's just the nice thing about notes is you're not dealing with those, termites, toilets and tenants.
Right.
So it's, I was just talking to somebody about that earlier. And so it really just gives you so much control. And again, that's what we do with becoming your own banker. It's just all about control.
Yeah. So takeaways on this: really keep your money in play. Don't get caught where you just go like, I don't know what to do, so I'm just going to keep everything safe, because you will lose your purchasing power on that, and you're just going backwards with this inflation. Inflation's not going anywhere for the foreseeable future. Number 2 could get worse. Number 3, through a recession. And then based upon what you've experienced and what you're seeing in the marketplace, having a shift, at least if you're not already in real estate or real estate lending or real estate notes, that's definitely some areas that you should focus on, because there's going to be relative more safety in there. And this is very different crisis than 2008. We had hyperinflated prices with bad loans. We don't have this time around, thank gosh, because we do have, property values that are probably too high in some areas, and those will naturally adjust down, but we have equity in those properties and they can absorb that type of a downturn in the marketplaces. So I agree with you really on all of those points, and it's just very well suited for what we have in the overall marketplace to, again, focus on those areas of preservation as well as wealth growth. And if you can, to your other point, if you can envelop those within a self-directed IRA, 401k, something that we've talked about many times on this podcast, it makes it even that much better for you. Any final thoughts on that? Did I kind of cover everything that you?
Yeah. One key that you said there was, there's a lot of equity in properties right now. So, all equity is lazy money. So one of the things we teach, like at the Money School Essentials training that we have coming up in Buffalo, is, where is your money? Let's first identify where it is and what you have available to you. And then how can we take advantage of the different laws that are in this country? Things like the self-directed IRAs, things like the whole life policies that we do for the money multiplier. So what do we do with that? But also, is there any money that you're missing out on? So one of those a lot of times is the equity in your home, because right now, if you've owned a house for the last couple couple of years, odds are you have 100 grand or more in equity, right? Almost everybody does. So if, let's say, let's just use that as an example, $100,000 in equity. Well, right now, that $100,000 is literally, just look around you right now. It's in your walls, it's in your studs, it's in your ceiling, it's in your house. You're not doing anything with it. So it's just sitting there. But if I can go out there and get something like a HELOC or a home equity agreement, and I could tap into that, now I can take that $100 and I could do it on just using a private money loan as an example, a private money loan at 12%. Well, that's $100,000 at 12%. That's $1,000 a month or $12,000 a year I have coming in. Well, let's say I got to pay 5% for the HELOC. That's still, do the math, that's still $7,000 a year. Now that I mean, how many of you could use an extra $7,000 a year for doing nothing but spending maybe 30 minutes to underwrite a deal and do a private money loan or do it to a private fund or something, right, or buy a note with it, right? So why not tap into that equity that we have and get that money working? Now, when the market adjusts and that equity comes down, though, guess what's going to happen? Those HELOCs, those home equity agreements are no longer going to be available to you. So I would say right now, go out there, tap into that money. Even if you got to immediately get that money out of the HELOC and stick it in another account where it's waiting for you, because they can call that HELOC too. If you don't use the money, they can take it away from you. So get that money moving. So get with Kevin, figure out some notes you can buy with that and get it happening before you lose that equity. But stuff like that right there is just things that a lot of people just don't even think about, or like you said, maybe they've never done it before, so they have a little fear there, and they're like, well, that's beyond what I'm capable of. But it's so easy. It's not hard. It's just having somebody like you or me to hold their hand, help them out with it. And that's what like that training in Buffalo is all about, is just making these connections where you meet people like us that are going to help you, that are willing to help you. I mean, we don't charge for really anything we do. I don't even, the ticket for the Buffalo events like $300 or something. It's really inexpensive.
Yeah, I think there's still an early bird. In fact, I'll have that link on there, everybody. So this is the in-person event, July 30th and 31st. So it's coming up 17 days, I think I said earlier, away. And I believe they may still have the early bird up there, but you better jump on that soon. And that's only $79. I mean, that's nothing. And I do like the point that you said you get to meet us, because the way you've put this together, these speakers aren't flying in, flying out. There's going to be some time where you can get to meet these people and have some time with them. So I like that aspect of it as well. And
we have a heck of a
full training. I mean, 10 to 5 each day. So there's going to be, plenty of information, new information for you, the right way to do things. And yeah, the speaker lineup is really, really strong. So I'll have that up on YouTube, everybody, and you can see that and get the dates. I'll have the link up there for you as well. For those listening to the podcast, go check out the Money School, REI. I think that's correct. Money School REI, and you'll see that July event on there. If you want to go directly to the link, it's Money School REI, as in real estate investment, moneyschoolrei.com/July-event. If you want to go directly to see more about that event. In fact, there's a video on there that Chris Naugle has put together about that event as well. And you can get started right there. If you have any questions for me on that, feel free to give me an email. And okay to put your email on the YouTube as well.
Yeah, absolutely. If I can help anybody, if anybody's had any questions about the event or anything that we talked about here today, happy to hop on a call with you, learn more about your situation. And whether this, what we do and, controlling your money at an event like this, whether it be right for you or not. So definitely reach out via email or schedule a call with me, and we'll chat about it.
And you guys have some books too, right?
We do. Yeah, I could. What I'll do, Kevin, is I'll send over to you a couple free bonuses you can give to anybody that goes to the link, and we'll get them over a copy of a couple books. Okay. I think that'll be really good. All
right. Awesome. Yeah, that'll be great. Super. Well, hey, thanks a lot for being on and carving out some time with me today. That was enjoyable. And again, hope everybody enjoyed that as well. And check those out. If you have any other questions, as we said, we'll put our emails on there, and look forward to putting another podcast for you together real soon. So on behalf on Stephen and I look forward to talking to you once again in the near future. Thanks again, Steve.
Thanks, Kevin.